Hey, I'm Daniel Snyder with Seeking Alpha. Today, we have the pleasure of talking with Ryan Wilday, the founder and one of the two partners of Crypto Waves, a special newsletter offered here on Seeking Alpha. Ryan, how are you today?
Doing great. How are you?
Doing well, doing well. So I don't want to waste any time. Let's dive right in. How did you initially get started trading cryptocurrencies? Was this early 2010s? How did you even trade them when you started?
I started mining it along with another crypto called Litecoin. And I just started holding them and eventually started selling them too. So getting a little bit of profit. And then over that period of time, I started understanding the charts. I watched how the market liked to move, got a feel for it. I mean, anything you're trading, you kind of got to watch it for a while. And then you start to get a feel for it. You just start to feel the market, so to speak. Over time, I had a lot more of a very specific strategy development. The Elliott wave theory comes into that. That's a big part of the service. Helped me read it better, when to take entries, when to take exits. But in those immature years, so to speak, of my crypto trading, I was simply mining it and selling it, and then trying to turn a profit on that mining operation, and then getting a feel for it. And it was really like 2015, 16, where I was making, very, very, very good profits by that time, had a good feel of the market. It was consistent. 17 was unbelievable for almost everybody was in crypto. And then, and I survived the bear market quite well. I mean, took a lot of profit out of the 2017 top, had to hunker down in the bear market, be very careful, and then, kind of rise out of the 2019, bottom, ready to go. So it's been a nice journey.
So you've been through in the ways, but now we're seeing all this new information come out. We're talking about JP Morgan with their Bitcoin fund. That's recent news. We saw over this last weekend, Bitcoin dropped below $50,000 a couple of times, and it's bouncing back. So what would you say to people now? What is the opportunity in crypto? And what would you also say to the skeptics?
To the opportunity now, we certainly are mature in this cycle, but we still have quite a bit more to go. Our next target is 90,000. And then we do expect some very brutal corrections in Bitcoin. When I say 90,000, of course, I mean Bitcoin. There's lots of nice targets we have out there for all these altcoins that we've been trading. So there's there's especially a lot of opportunities in some of these smaller altcoins that are still kind of flushing out where they're going. And we've got some nice targets for those. And I can name a few like Cardano and Elrond, which is EGLD. I've talked about on Seeking Alpha in Seeking Alpha articles. Eventually, we do see a longer multi-month correction coming in Bitcoin. Is still a part of this cycle. It's very natural to see very deep corrections and consolidations as a bull market kind of cycles out. And in that pullback that we see in that multi-month pullback, we expect to have some really great entries. Eventually, our target is over 150K or 150K or higher. And so we'll use that multi-month pullback to kind of build our position larger again. So there's still lots of opportunity, but I think everyone has to recognize that it is a little mature now, but that doesn't mean you can't capture some return out of it.
Right. And you're throwing out some pretty big numbers there. You're talking about people out there. Like, another misconception is people think that this is a bubble. Like, we've been talking about that, but they also think they've missed their chance. But there's still a lot of large numbers coming out with price targets, like what you just said, 150K or 90K. That is significant upside. Is there anything you want to clear up in regards to that?
Well, I think one thing that people get mistaken is they think that they've got to, buy one Bitcoin at 55,000 to participate. And a lot of people that are new to crypto don't understand that they can buy several decimal places, right? So you can even skip some coffee, buy some crypto. I always like to tease it that way. But if you've got $2,000, $3,000, and you're not participating in this market, and that's some investable cash, which you can risk. You can still make 50% on it. You might be able to make 100% on it, depending on timing your entries. So the money is still out there to be made. So I don't think anybody missed the boat. Now, I'm just going to say it's always going to be a volatile market. The nature of this market is volatile. In fact, because some of the, like you said, institutions, funds are picking it up, the liquidity is dropping. That liquidity equals volatility. So as liquidity drops, things tend to get more volatile. So we can just going to see more volatility as we go. But if you're a trader like myself, that's a gift. We hope to help. In the service, we hope to help teach people to embrace that volatility and enjoy it. It means being particular about your positions. It means, when we're hitting targets, take some profit off. Don't get that FOMO when you've been going vertical. Start to realize some of that profit and leave some of it in the bank, so to speak, for adding as we drop. Then you capture some of that volatility. So, I think there's a lot to go. So it's and at the same time, our job is to shepherd people through through the pullbacks and accumulate for the next run. Because even after this cycle, I'm just going to be talking about higher targets after this 150K is over. We're just going to, we're going to drop into a bear market and then get ready for the next bull cycle. So it's a long journey for a lot of years from now. So
you're talking about shepherding people. You're talking about altcoins. You're talking about volatility. And there's been a lot of talk about altcoins right now, especially with Dogecoin, right? And you're talking about supply being taken away and people holding on to it. But like, doesn't Dogecoin have 160 billion something coins? Like the supply is outrageous. So what do you make of all this altcoin scenario?
Well, you have to be selective. I mean, I took a position in Dogecoin the other day at 23 cents, but for me, it was a tiny position. It basically, because I saw a rally coming, another rally coming, and so far that position is up about 15%, something like that. But you do have to be cautious in altcoins. Yeah, there's a lot of supply in some of them. There's, certainly a lot of the altcoins are far more liquid than Bitcoin now in some regards. But they're very volatile. I mean, it's, if you've got something that sells at pennies, it doesn't take much for somebody, even someone that's not a real whale can come along and move something many percentiles. And that's what we see altcoin. You just got to be selective. I know a lot of people will say, hey, pick the great projects. I wrote an article. I don't fall in love with projects. I trade charts. I mean, I'm purely a technical trader. I'm interested in the projects. I love what cryptos are doing with the monetary system, the decentralized finance, all of these great traits. I'm super interested in it, but I don't trade based on it. I watch, I make sure the market is bullish on something and I follow along, so to speak. And so I'm very purely a technical trader. And so we're very selective along those lines. Is the chart set up right? We use the Elliott wave theory. Do we have a target? We use the Elliott wave theory to define risk to reward. This is where our stop is. That's our risk level. Okay. And are we getting a good distance to the target? And then is our position size right with that stop out that we have? Because if we do stop out on trades, and when you do, you don't want to take a hit. So we teach our subscribers how to do that as best we possibly can and try to coach them through that. When
it comes to picking your altcoins, you're looking strictly at technicals, or is there another process that you also add into that in your selection?
Strictly technicals. I mean, it's strictly Elliott wave theory, because I've seen plenty of fabulous crypto projects that the market just couldn't get it to act bullishly. There could be, or you could see something like Dogecoin where the market is almost overheated, right? I mean, it's Doge is functionally it's a really great exchange coin, meaning it transacts really fast, and so it's nice in that regard. But it doesn't have much more than that. And so what's happening now is just people getting excited about Elon Musk tweeting about it and whatnot, and so that's kind of a very concentrated sentiment that you can get caught up in and get trapped. But that said, lately I didn't mind the chart that way it's set up again. I missed the bigger run, and I didn't mind the way it was setting up for this next run. And so as long as it's above, I forget the price exactly, it's something like 17 cents or maybe 13 cents. As long as it's over that, I'm bullish. And so it really is based on that. But I'm just always really cautious about getting caught up in the hot thing. It's very easy to get trapped, like GameStop in the stock world. It's really easy to get caught in those and then not get out at a good time. So.
Right. And that's most investors' fear, is they think that they've missed the move by the time the news is picked up about it or it goes mainstream, Twitter's going off about it. So, well, let's go back. So you're talking about Dogecoin, you're talking about altcoins. You must be talking about these in your newsletter, right? So tell us a little bit about your newsletter and how you address these things. And for all those listening, newsletter is Crypto Waves.
Yeah. So every week we put out a Google Doc that's got, and we basically change the link every week. So if someone quits the service, so it's fresh every Monday. In that we've got support levels, and support levels are where we consider entries are solid. So we list those out, and we'll sort of have higher, mid, and lower. So those are for folks to enter. And then we've got what we call invalidation point. That's where the chart really turned over, and so that would be where your stop is. And then we have targets, and these are all based on the Elliott wave theory. And then as it moves, we have another column in the sheet where we add profitable stops. So once you get some profit, you really want to start at least lock in break even at worst, best to make sure you don't turn a profit into a loss. So we lock that in with the profitable stop. and then we roll that up as we go. So it's really, it's teaching people how to trade. Like, this is how traders work. You look for a setup, you have a risk to reward calculated, which again is stop to target compared, and then you start rolling up the stop as you go. And so just very classical trading methodology applied to crypto. And to me, it takes the, when I learned how to do this well, it took the kind of mystery out of these crazy volatile assets. I mean, it's what to expect, what your risk levels are, and if you measure your risk, you can position size correctly so it's not going to get you underwater if the trade doesn't go our way.
Yeah. Well, Ryan, I'm so glad you created this service. I mean, it is something that people could have been using years ago. So thank you so much for creating with Crypto Waves. Everyone watching this video, if you want to dive in to Ryan's work, go ahead and sign up for Crypto Waves using the link below. And Ryan, thank you so much for your time today. And we hope to speak to you again soon.
All right. Thank you.